Hi everyone, it's Sean from STK Markets here in the new year. Happy New Year to everyone. Listen, we're setting the new year off with a bang. We've got a project which ticks all our boxes. We look for management, we look for a product and or an opportunity which can scale, and we also look at the investors who are investing on side. We believe we've got all the ingredients to get the results that we want. We're not going into the market for a 10-20% return. We see a lot of growth here, and we're here with CEO Aaron Revelle with Pursuit Minerals. We've been investing in Pursuit for quite some time. We think the market is primed for their lithium and gold asset. Aaron, you've got a history of delivering a 20 million market cap into 300 million companies that you've founded. This isn't your first rodeo. You're setting up for strength. The market's right for you. Can you tell us why Pursuit is a very attractive option right now for myself and my investors to look at this placement that we're doing to fund your drilling campaign to get the growth off the back of this exceptional PFS?
Yeah, thanks, Sean. We're in a very good position with Pursuit, and as you mentioned, we're very much following a blueprint that allowed us to put together an asset that achieved, a 340 million Australian exit in a very similar market cycle where lithium prices had become depressed. Then they rebounded quite significantly, which saw a lot of M&A activity, where the pattern was several $100 million in terms of the exit price. So for Pursuit over the past couple of years, we've really focused on the Rio Grande Sur project from a resource standpoint, then moving into the chemical engineering to de-risk the project. So if you look at the project, it's over 1 million tons of resource, which is significant in itself. That's a 50-year plus mine life. So that ticks that box. Then from there, we have the pilot plant that's produced the 99.5% technical grade lithium carbonate. That's the product that everybody's after, especially in the market today where if you look at the demand scenario and you break out what the demand is actually being used for, we're seeing now a transition where EVs dominated the space. 70% of lithium battery demand was electric vehicles. We now have BESS electric storage systems that are taking over about 30% of the market. So there's a very big value driver that's just starting to come online. And we're seeing that now actually in real time with some of the tragedies in Victoria with bushfires and the reliance on the electrical storage grids that are coming into play. So for us, that moves us into our PFS, where we have an outlined CapEx, we have an outlined OpEx, and the financial metrics of what it takes to actually build this operation at 5,000 tons per annum, and then scaling it with a further 12,500 tons to achieve that 17,500 ton scenario. So for us, the numbers in themselves, you're over $500 million in the NPV. CapEx is sitting at around 125 million US, and the operating cost, C1 cost, is 6,500 US per ton, which is very consistent for Argentina in the lowest quarter of the cost curve, where Argentina in itself is enjoying a lot of M&A activity. Naturally, we've seen the Rio Tinto acquisition of Arcadium start to play out. However, if you look at the top 10 global mining companies, BHP does not have lithium exposure. Glencore in itself, whilst it might become part of Rio Tinto, doesn't have lithium exposure. Anglo Tech doesn't have lithium exposure, and you keep going down the list. And a lot of these companies don't actually have the opportunity to acquire lithium assets, be it there's the obvious target, which is Albemarle. That's a fit for someone like BHP, being the biggest lithium company in the world. However, having said that, as you go down the list, the opportunities are very scarce, especially in Argentina, where majority of the salars have been consolidated. Ganfeng, for example, Chinese company, own quite a few salars. They're not looking to divest their assets. They're long-term holders and operators. So this positions Pursuit now where we can walk the asset up the value curve, where you are walking towards production. That's the ultimate end goal, where you're bringing on lithium carbonate, you're bringing on that new supply. However, it presents that opportunity for investors along the path where an M&A opportunity might come, where along that project development curve, where it being, finishing the PFS, where you've, signed an offtake partner, where you've expanded the resource, where you are starting to build, commencing construction. And we've seen that historically in the lithium space in Argentina, where projects get to, say, a tipping point, and then from there they're taken out. So it's quite an exciting time time for us, given that we've added substantive value for very little capital, mind you, as well. If you look at our peers in terms of the equal spend that it's taken them to progress their projects to this level, for us, we've spent probably a quarter to 1/5 of the capital to bring the project to a JORC resource over 1 million tonnes, operational pilot plant, proven production of technical grade, and now a PFS. So we have that team on the ground, the operational guys who know how to operate in Argentina. We have a very distinguished board, especially with Tom Eadie as chair, who has worked on numerous companies that have gone from 15 million to $1 billion plus in market cap. And we're continuing to add value as we continue those work streams. And that's just the lithium, not taking into account the gold, which has its own re-rate potential and opportunities there as well.
Aaron, that's a really good synopsis. Just we'll finish up on the lithium, then we'll go to the gold. With the lithium, you've got I guess a market which sort of was in the doldrums, and we've seen that there's potentially a deficit this year. The price has virtually almost doubled, I think, from last looking at it. It's set to go even higher, so it's sort of in the right commodity, the right space. Like we saw with tungsten quite a few years ago, there is an anomaly in the market with these new battery storage solutions, which is part of the whole AI boom. So you could almost say this is almost like an AI trade, where we're looking at fitting into that demographic, but still sticking with our knitting with mining stocks. There's just not enough lithium out there. Is that correct?
It's pretty much right. I mean, where we've seen the market go from, it was a very big surplus that came online, and rightly so. There was an increased demand for lithium, and there were a plethora of projects that might have been in a feasibility stage or on care and maintenance that hadn't had much love, and they were brought online through that 2020, 2022, 2023 cycle. However, that pipeline doesn't exist now, and the market's seeing that with the spot price now above 20,000 per tonne. If you look at the Canaccord long-term forecasts, we're now at the 2029, 2030 estimate in terms of pricing. A lot of the historical forecasts were expecting, 2026, 2027, and even 2028 around that 14 to 18,000 per tonne bandwidth. So whilst the spot price can come back, it's looking that it will continue along these lines in terms of where is the new supply coming from, given that there is significant demand through BES electrical storage, EVs continue to grow. So there's consistent demand, which is forcing the market to move from surplus into deficit, which will favor a lot of these projects in terms of, being able to raise the capital where there'll be investment opportunity for capital looking to enter the sector, but also in terms of the M&A side as well. But not all lithium projects are created equal, and I think that that's been really highlighted in the last cycle, where Argentina, in terms of its political stability, comparable to say Chile, which does have some of the national bodies moving into the lithium space. Argentina and within the lithium triangle has seen a lot of the tier one companies move into the jurisdiction. Rio Tinto being the headline of that. So for this next evolution of the lithium market, where there isn't enough lithium and lithium projects are needed, Argentina is very well placed, especially with the projects like Pursuit's project, to capitalize on that opportunity.
It's a lot happening, Aaron, at the moment, and you've got a well thought out plan over the next 12 months, like you have done this successfully in the past. We're providing capital to the company now to do drilling to increase the obviously the asset. But can you just go through the value creations? Like the PFS is a massive milestone. Can we get funding off the base of this? Can we get an offtake off the base of this? Are these value adds which are coming out in the short term, or are they short term or are they longer term? What can shareholders expect to grow their wealth over the next 12 months with Pursuit?
Absolutely. So the PFS is a big one for us, and that we've been looking for this and working on it for some time when we actually purchased the pilot plant. The PFS creates the framework, so to speak, of those strategic partnerships, the MOUs to actually finance the new supply. But having said that, we're not just resting on our laurels. We are going to drill the Mito tenement in the north, which has significant opportunity for resource expansion. We've been holding off on drilling Mito until we started to see a rebound in the lithium price, and now we're seeing a rebound in the price. We expect to be able to drill that and have some price appreciation to the market cap and share price when we bring out those results. Further to that, we will continue the PFS work as we continue the engineering. It's working with the off-takers, looking at saying this is what we've done, doing a gap analysis of what they want to see so that they can move towards a final investment decision to actually allocate the capex to the project and start the construction phase. So we'll be running through those work streams that'll be, positive news flow to the market as we continue to de-risk the project. So the project has achieved a position now where it has got a positive feasibility study. It can be built. It can bring new supply into the market. And for us now, it's about attaching the offtake partner, which our board has a very strong track record of having worked with commodity trading firms, investment banks in terms of debt commodity financing, and working with those partners, which we do have quite a few that already have received samples of the product. So from us, we'll be working with the off-takers, refining it, making sure that our product meets their needs, and working through those scenarios so that we can look towards a strategic partnership throughout this year.
Well, that's fantastic, Aaron. But what we also have, say with EQR, for example, they had 25 or 20 million euro debt. What they did a prepayment facility off on an offtake to take out that debt. So your 120 odd million US dollars, you're looking at I think it's around 80% debt, 20% equity. But that could be made up of prepayment as well. So there won't be huge dilution for shareholders. So we're not looking at tripling the amount of shares on issue. There's different tools and levers you can pull so that people who are buying shares now have that almost that full upside to take the company to that NPV of 500 million with a market cap of around 18 million at the moment. That's a huge multi-bagger there.
Absolutely. And more importantly, those scenarios are put forward more for pre-feasibility and feasibility study guidelines. You have to work through the engineering in accordance with JORC, ACCE4 engineering, things like that. However, in Argentina, we've seen Glencore write a check for $400 million, 100% of capex for the Centenario project that's owned by Eramet. So off-takers, when they see a project to secure supply, whilst we give these ratios and their standard capital market ratios, we are seeing the investment appetite where off-takers are actually putting up 100% of the capex, working it into their payback. I think the payback for us was about 6 to 7 years. A lot of these off-takers are looking to secure supply for the longer term. They're not looking for 1-2 years of spot product. You're talking 10, 15, 20, even life of mine off-take contracts. So for us, the financing is highly probable to be non-dilutive, given the interest in the market, given the appetite for the people that we're dealing with. They're not looking for investment opportunity; they're looking to secure supply of lithium, which changes the way that they view the investment opportunity. Sure, if you're running a scenario like a Eurobond or a standard DCM corporate finance product, yes, that's an investment return, and people are looking at interest rates and PIK and all the rest. So for us, we're very positive in terms of the discussions that we've had so far have been leaning towards significant capital investment, which is tied to the offtake, tied to the long-term security of supply. So as you said, it goes to that point of what part of your NAV, your net asset value, are you trading at? Is it that full 500 million? At 20 million, is it too low? Somewhere in the middle. The further that you de-risk the project, the closer you get towards that MPV. And that's something we've seen historically in the lithium space now for the past sort of 10 years as these projects have been developed and brought online and brought into production. The most famous, obviously, is that Alchem, Arcadium, Rio Tinto, Olaroz, Phoenix, the FMC portfolios. They've performed exceptionally well. We're investors that have held on. They have achieved those 20, 40, 50 time returns over the period. So pursuits at the start of that journey, and we're going to continue to de-risk the project through working with the off-takers, expanding the resource, working through the engineering to ensure that the lithium carbonate meets the off-taker specification, which then leads us into, okay, let's work through the financing, be it 100% of offtake, a portion of debt that's the project at these prices. Being in the lowest quartile of the cost curve at 6,500 per ton, it's very capable of servicing debt, not only at this current price, spot price of 20,000 a ton. However, even if the price drops back to 12.5 to 10,000 a ton, the project still remains profitable. And that's one of the bigger advantages sitting in that lowest cost quartile curve. So for us, we're in a position where the project's very attractive in terms of the economics. It's very attractive in terms of the jurisdiction, in terms of the resource. And for us now, it's to continue that development and to continue to add value to the project.
Oh, that's just brilliant. I think the key takeaway is that your strategic thinking has got to pursued through the downturn. And it's not lost to me that you put the gold asset into the business when lithium was on the lows, but markets can pivot very quickly, and lithium has pivoted quickly. You're raising money now to prove out this JORC to double the reserve potentially. Fast move the project forward. The PFS being released is just timing is impeccable. And that brings us to the gold. You've got a very good lithium asset. The gold, I mean, lowest point of the cost curve, that's like Southern Cross 10 grams is what we're looking at. And that's why Southern Cross is so special. We're looking at your gold project now as well. You're 100 clicks from a 5 million ounce system at 9, 10 grams. You've defined your drill targets. You've got it ready. And you'll be doing some drilling very shortly as well. So not only do we have the lithium in the right place, right time, gold's just gone through 4,500 over the break. It's a very exciting place to be as well. That the scuttlebutt is that's going higher. You've got a two commodity strategy here, and strategically, lithium's back in full force. But gold could be very exciting as well. You've got the ability to drill that out. It's not a long-winded drill process either. You can put 10 drill holes in this very quickly because we're not deep. Just allude to that so our investors can see we've got two chances of making it big on this investment.
Absolutely. The gold project's not to be slept on. It's a phenomenal asset. And whilst lithium is sexy now and it'll come back as that foray, those gold assets, the gold asset that we have, if you look around that system, that's a 30 million ounce endowed province in the Deseado Massif. It is one of the tier one epithermal vein systems in the world. Our project, as you said, sits very close to Cerro Negro. That was again a project that did some shallow drilling, passed through a few hands. It wasn't overly considered spectacular, and then the deeper drill holes went in, bang, out came this 5 million ounce system. So the playbook is very similar to what we're following. Sasha has all of those priority targets, which we released to the market at the end of last year. Those priority targets are quite phenomenal in terms of what they can achieve, and we've really looked at them with some quite excitement. So for us, it's now doing that deeper drilling, identifying the mineralization at depth, hopefully having some of those significant intercepts, which we've seen at other mines within a close proximity. If you have a look within that 100-kilometer radius, there are some fantastic, 500,000 million ounce systems, getting some very significant gold hits, also some significant silver hits. That is, as silver approaches that 70, 80 US per ounce mark. It's quite exciting for us where we can set up this project, do the first discovery hits, hopefully have some very good results, which then in turn will set up further drilling as you build out that system, build it out towards a JORC resource, and then the magic word of production starts to have a look around. From there, the production element, the Deseado Massif does have quite a few mills on care and maintenance, which is one of the things that attracted us to the region, is that ability to toll treat material. Should you have a resource, should you have a discovery, should you be able to build out, a prospect that can actually be, put into production, there are options for low cost, quick production through toll treating at mills, even buying existing mills that are on care and maintenance. So for us, there's not only a short-term strategy with Sasha, but a longer-term strategy as well, which is what really drew us to the asset last year, is that we could focus pursuit as a pure play on Argentina. We're not a lithium developer on its own or a gold explorer on its own. We're a pure play on Argentina that's advancing the dual commodities that are both having some spectacular results in the market at the minute, with gold again above 4,500 an ounce. A lot of forecasts believing that it'll breach that 5,000 an ounce threshold in 2026, and now lithium swinging back from surplus through to deficit, where you've seen the spot price breach 20,000 per ton for the first time in over 18 months, over nearly 2 years now. So for us, with the solid fundamentals of both lithium and gold, we have two projects that have multiple re-rate opportunities between them, but also on their own, with the gold having multiple potentials for hits across the Sasha main vein, across the Marcelina silica cap. There's other areas within the project that are very underexplored that Tom Eadie is quite excited to do a lot of drilling on the surface and build out that project. And then conversely, you've got the lithium lithium, which is further advanced, is further developed, has its JORC resource, has the PFS, has produced that 99.5% technical grade lithium carbonate, of which now it's about moving that project towards production and attaching those strategic partners, to bring that project online, expand the resource, looking at the multiple value adds that that project has as well for 2026.
Okay, Aaron, thanks. That's great. Now, this timeline that investors like to ask me every single time, can you give us a quick rundown on the lithium first, then the gold, what we should expect over the coming months? So obviously we're excited to see where our money can go.
Yeah, absolutely. So for us, the next steps of the lithium, once you've released the PFS, it's optimizing the pilot plant. So making sure that all of the studies are starting to move forward and outlining the next stages through environmental approvals and all of those things that go with that in terms of product samples and continuing to produce for the offtake partners. However, whilst we're doing that, we'll be looking at mobilizing the drill rigs for the Mito tenement, which is in the north. So that's a little bit of a different process to gold, as you are at elevation, you're 4,000 meters above sea level. So it's a bit more of an intensive drilling campaign, but we'll be looking to mobilize that. I'm hoping by the end of the first quarter, start of the second, where you'll actually have the drill hitting the ground. Simultaneously, however, that's where we'll be doing the geophysics and the geological structural mapping, just the gap analysis that you may have seen in our announcement for the gold targets, where we can then move the drill rigs up at Sasha Marcelina again, before hopefully by the end of the first quarter, start of the second. So you'll have rigs moving simultaneously across the two projects, which will be bringing out those drill results. For us, however, we're also looking to move forward in that first 6 months of the year on the PFS. We want to get out and move those discussions where we'll be sitting in front of the offtake partners, the various parties that have signed NDAs, taken samples, and working through the gap analysis of what is in the study, what they need to see, be it through further testing, for example, maybe site evaporation ponds, the things that they need to see to move towards that final investment decision over the first 6 months. And that really creates the framework for your MOU and strategic partnership. So from there, it's a very busy 6 months as we continue to move those projects across multiple geological exploration programs, but also for the lithium, continuing the chemical engineering, continuing, to work on the various work streams to take the PFS essentially towards those BFS levels, where, from that perspective, you're starting to get the outline program of works that you need to get those checks in to actually build the project.
That's wonderful, Aaron. That there's a lot happening and obviously a lot of news flow coming. So the company should be reporting continuously good news, and any of those, or hopefully good news, and any of those could be share price re-rating. So there's a lot coming out in the near term that investors should be happy with and eagerly anticipating.
Absolutely. And from us, it's about having that constant news flow in the market, updating investors, be it through, a drill hit at the Sasha Marcelina prospect, announcement of a strategic partnership, the drilling at Mito, expanding the resource substantially. You start to line these up where, as you mentioned, any of these can be a significant re-rate opportunity for the project. So very busy first half of 2026 for the company as we continue to build the projects and continue to deliver the value for them.
Aaron, listen, I can't thank you enough. I remember when I saw you in Melbourne last year, we were sitting across each other from the desk. You had no notes. You didn't have a laptop in front of you. You've got this down to a T. You've had successful outcomes in the past where you put these projects together. You're a builder as well as a prospector, but you can definitely deliver. I'm very happy to own shares for me and my family. We'll be putting some more money in this transaction again as normal. We're definitely along for the ride. As I said earlier in the call, we've got the right investors coming in on this that have got the longer term vision. We believe we've got a very good register. We believe we've got the right management. Aaron, you've just spoke for half an hour. I don't think you've had a breath, and I know you could keep going because your knowledge is just fantastic. Like Mike Hudson's, like we did with Craig Bradshaw and EQR, you're of that caliber where you can deliver. But the reality is, I think you've got this down to a T, Aaron. So I'm really looking forward to the next 6 months in terms of the PFS drill results for both lithium gold, potentially offtake partners. I know for a fact that you've got not just one offtaker in the room, there are 5 or 6, I think it's 9 that are in the data room already looking at this data. It's just a tremendous place to be at such a low valuation. I feel like we're stealing shares from you. And the reality is, Aaron, you've got 13% of the register, you personally. So you're very incentivized to make this work. You're not on the hugest salary in the world. You believe in having skin in the game and equity. And that's where you're going to create your wealth, not from just directors' fees and wages. You see this asset that you've got in your personal portfolio being a big life changer for you. So we're all in it together, as we all should be. So, Aaron, I can't thank you enough for your time. I'm really looking forward to seeing the progress over the next 6 to 12 months and beyond. But I think things will rocket over the next 3 to 4 months, 6 months as these drill results happen and the company starts getting more and more traction in the commodities. Well, I think we're in the right place, right time. So thanks a lot for your time, Aaron. It's been a great journey so far. We came in at 6, we came in at 7.5. This price will be worked out in the next couple of days. But the reality is we're averaging up because you keep delivering on what you said you're going to do. So thanks, Aaron. I continue to enjoy watching this space.
Thank you, Sean. And as you rightly said, I'm very incentivized by my holding, and as a result, failure is not an option for this. And we've been on this journey, myself and a few of my closer investors, for many years in the lithium space, and we know how these journeys play out. So from our perspective, it is all about continuing to deliver and continuing to hit those milestones to really ensure that we're working towards that collective of rising, the all boats, rising tides lift all boats sort of thing. So for us, it's about gaining value, adding value to that market cap, and ensuring we continue to deliver. So we appreciate the support and look forward to 2026 working with you as we continue to deliver across both projects.
Thanks, Aaron. We love the way you strategically think. It's evident in how you're progressing the business. Congratulations.
Thanks, Sean.